The big story that we're breaking this morning, and of course we need to go across to Sajid for this one. It's a big one. And it stems a bit from SEBI's action on Jane Street as well. On expiry day, a strange pattern has emerged. Option premiums either spike or collapse in ways that defy logic. SEBI is now investigating what traders call exploding volatility and killing volatility trades. Moves that may be distorting index prices and shaking investor confidence. My colleague Sajid brings in more details on this. Yes, Sajid.
That's right, Tamanna. This is a phenomenon which has been witnessed in the market for the last 18 to 24 months, when on an expiry day you have, a phenomena called exploding volatility or killing volatility, which means, now what does it mean? It basically means that suddenly the premiums jump up unexpectedly, and then without any reason, or on certain days the premiums fall unexpectedly without any reason, and that's done based on the implied volatility which on which many traders trade. So suddenly you see that there is a buying of options happening, as a result of which the premiums jump up, and as a result, and that's because the volatility was low, and from there it gets peaked. And then there are some times when we have seen that because the implied volatility is high on an expiry day, you suddenly see the volatility coming down because there are people selling options at the high volatility, taking the entire premium of the option to almost to zero. So that's something which has been under the radar for some time for the market regulator and stock exchanges, especially in index options. And this was more visible during the weekly options, when we had a weekly option expiring on a daily basis on the stock exchanges. The market regulator is looking at all those trades at this point in time. There is no certainty that they will come to a conclusion as of now, because the investigations are ongoing. But at the same time, this exploding volatility and killing volatility is something which is in the radar, and it comes on the back of Jane Street trades which are there, or high frequency trades which are coming from many of the global players into the Indian market.
Okay, it's raining exclusives this morning at NDTV Profit. Thank you for that, Sajid. That's a big one. Scrutiny on Nifty options, Jane Street or no Jane Street, or maybe that's why Jane Street's taking its time. But this other big story that we're talking about, and Vishwanath, this is something that you broke over the weekend. HDFC Bank facing complaints of misusing fixed deposits by at least 4 non-resident Indian customers, and the important part, the EOW jumping in.
Yeah, so complaints have been filed with the EOW in 3 different cities, Chandigarh, Gurgaon, as well as Nagpur. There are 4 different customers who claim that their fixed deposits have been misused, a cumulative amount of about 25 to 30 crore that has been used. Essentially, these customers were sold additional Tier 1 bonds, which were issued by Credit Suisse. And these, of course, got written off after Credit Suisse crumbled in 2023. Since then, these customers have been claiming that they were missold these products. They were told that they would get a 12 to 13% return, but obviously there was nothing like that. Moreover, they were also issued loans against these holdings, so against the fixed deposits that they held already. And then once the 81 bonds sort of went bust, the money was adjusted against the fixed deposits. And that's a clear sort of problem that they've had. They're also alleging that their income amount was actually inflated by officials of HDFC Bank. At least in one of these cases, the person's annual income was $40,000 US, which was inflated to $140,000 US. This is because 81 bonds can only be sold to HNI clients. So to make them look like HNI clients, the documents were forged. That is a claim that is being made. The bank so far has not responded to any queries that we had sent across, but a lot of legal troubles for HDFC Bank at this point in time.
It sounds worse than the Yes Bank issue, which was the mis-selling of an additional Tier 1
There's a loan layer here, so that's
There's a loan layer. There's seemingly forging allegations. It's much deeper than that.
Mark, no comment from HDFC Bank yet. Okay, so we've written to them. We're awaiting their comments because these are serious allegations. Thank you, Vishy, for that.